Thank you very much. So rather than speaking about insurance, which is a fascinating topic, I thought what I would do is give you a chat today about we're in the problem solution business. So typically we solve our problems when claims occur. So what I'd rather do than speak about the minutiae of insurance policies, thought I would talk backwards a little bit about the things that have caused the problems that we have to respond to, and maybe that would give from a planning standpoint, would give it a little bit of context. You will find that there is a recurring theme that runs through some of the presentations, I'm sure, because no matter what you talk about in estate administration or in estate planning, there's some common themes that occur, and I hopefully will not be intruding too much on my following speakers' presentations or speaking too much about what Douglas spoke before me. So what I'd like to do is explain why executors should consider estate administration insurance to support and protect the executor, to secure the assets for the beneficiaries, and to protect your legacy if you're a testator. So these three questions I'll ask at the end whether I've done it. Why is it important to protect the executor? Why is it important to clarify your inheritance plans for your family? And why is it important to have supporting documentation in place for it? Now, does anybody in here have a will? Okay, now of those hands that are up, are any of you lying? Because most people in Canada, if you're to believe some of the statistics, perhaps don't have a will. It's an interesting question. We ask it all the time, and you got pretty good, sort of a cross-section here. I had some hands go up and some hands don't go up. So that probably speaks to the real situation. Has anyone in here acted as an executor in the past? Okay. Did you enjoy it?
Time-consuming.
It's time-consuming.
Very detailed.
Yes. It's typically a surprise to a person doing it the first time. It's difficult to be prepared for the task, unless, of course, you're a lawyer that's got formal training in it, but it can be a surprising and challenging role. Does anybody in here expect to be acting as an executor for anyone else? Okay. Family member? Probably 98% of the population expects to name a family member as an executor. So it's certainly a common role that occurs, and despite the fact that we have trust companies that are soliciting this type of work, most people are using their own family members to act to represent their final wishes. So it's certainly relevant to most people. So what is an executor or an estate trustee? I'll probably use executor most of the time because I'm trying to save on words. Estate trustee is a uniquely Ontario term in Canada, I think. Charles?
I think so.
Okay. So it's someone that's named in the will as the person to make sure that the instructions in the will are properly followed. As I say, most people plan to name a family member or close friend as their estate trustee or executor. And I think everybody in here would agree that it's typically viewed as a terrific compliment when you're named as an executor. It's really a statement that you are respected, you are trusted, you're loved by a member of the family or a close friend. So the greatest compliment. Occasionally we hear it's the greatest curse as well. So it's a two-sided or a blade with two edges. Now, an executor is also a fiduciary, and the fiduciary is someone that is responsible for managing someone else's money. And the duty that you have as a fiduciary is much higher than the duty you have for looking after your own affairs. So when you're entrusted with someone else's money, an estate being an excellent example of that, the expectation is that you will be providing perhaps a higher level of diligence in the management of the other person's, the other people's money than you might be giving your own affairs. So it's not as simple as if you're very relaxed, you don't keep records, you don't worry, you don't open mail. That's not the type of approach that you're allowed to have as a fiduciary. And if it is an approach that you embrace, it may come back to haunt you later on. So let's talk a little bit about what estate dynamics are like today. There's $1.5 trillion in the next 25 years changing hands between generations in Canada. That's $165 million-ish per day. Now, if anybody wants to correct that math, feel free to do so. I didn't have a calculator with enough zeros on it to come up with that. I borrowed that stat from someone else, so I'm relying on it to be accurate. But it's a tremendous amount of money that's changing hands over the course of the next 25 years. It has everyone's attention. But there's some other things that are going on at the same time that I think are important to pay attention to. The nuclear family of the past, the Beaver-Cleaver family, is largely no longer. Where you used to have mom and dad, the nuclear family, mom and dad, 2 or 3 kids. They didn't get divorced, stayed together for their entire lives. The extended family today is a lot different. Do you ever look at an obituary? When I was a young guy, I never did. Now I'm looking at obituaries every day. I turn it on. It's like the first thing I do. I hope everybody's still here. Reading an obituary is an interesting thing because it used to be you would see sort of 2 family names, so mom's name and dad's name, and everybody had the same last name or one of 2 last names. Try reading an obit today. You can't figure out. There are hyphenated names, there are different names, there are multiple names of all kinds of people. You simply cannot tell who's related to who and in what fashion because it's the nature of the extended, blended, non-traditional family that exists today. And if you think about that, it poses some real challenges to people that are acting as executors because there may be people within the estate that you need to deal with that you don't know very well or perhaps don't even know at all. It's a lot different than negotiating or communicating with your sister when it could be sort of 3 steps away from multiple marriages that you are looking after. Communications and information today, different than when I was a young fella. When I was a young fella, they had those, remember they brought out the touch-tone phone? I remember that. It's very sad. Newspapers. People got their information through newspapers. And how many people remember having an Encyclopedia Britannica? If you wanted information, where did you go? You looked it up in that Encyclopedia Britannica. Hopefully they delivered all of the units to your set by the time you got up to the Zs. You wanted to be sure you had a full set at home. Today, a little different. People are communicating not by telephone as much as they used to. So you've got text messaging, you've got email, you've got Skype, you've got any multitude of different ways that people communicate. You have social media, and I can tell you that my knowledge of a lot of these things, very, very limited. You've got the complexity and size of assets today, which are much different than they used to be. At one time, mom and dad had perhaps a pension, they had some savings, they owned their house, and they had their contents, and that was really the sort of the look of the Canadian estate. The estate today is much more complex. People are day trading stocks. They're invested in real estate investment trusts. They've got mutual funds. They've got private mortgages. They have all kinds of investments and financial vehicles that are new and very exciting. But if you can imagine stepping into it and having no understanding of how you're supposed to manage this sort of thing because you don't have any experience in it, you can imagine the challenge that comes to an executor. How would you even know to look for online accounts? And that question that somebody brought up about passwords and registration of these digital assets that exist. 20 years ago, who would have even thought of such a thing? And all the while, estate litigation is going like this. It's a area of expanding interest to beneficiaries, to charities, Lawyers are paying much more attention to estates perhaps than they ever did in the past. So you have an increased risk of personal liability because there are, according to one of our friends in the bar in Toronto, Jordan Ayton, 18 areas of negligence that can result in personal liability for an executor. There could be more than that, but I don't think he's exaggerating with that number. We've got all the challenges that are coming out with the estate administration tax scheme in Ontario now. We've got things like British Columbia, where you're allowed to, where a person that's been excluded from a will can bring an action before the court and make application to be included where they were specifically excluded by the testator. Quite a frightening thought for a lot of people. Claims frequency with lawyers on estate litigation problems or on wills and estates practice are on the increase. Our average claim cost is over $50,000. So it's what we call a perfect storm building. So you've got change in demographics, people that are becoming age 65, the numbers are going way, way up. We've got a ton of money changing hands. We've got all kinds of differences between family dynamics and communications, all of which speaks to accountability of the estate trustee, and it's managed by family and friends, and typically people that don't have any formal training and in some cases no knowledge of what they're doing. If you talk to beneficiaries, it's interesting. So beneficiaries will tell us that they expect that their retirement is going to be funded through, a variety of things. Lottery winnings does fit in there. Okay? And they say inheritance is a low part of what anybody expects in their estate planning process. Typically, we understand that as many as 40% of people are expecting a windfall from an estate to help fund their retirement. So you can imagine the tension that builds when people are assuming that perhaps there isn't going to be money to fund that. Mom and dad are going to live for a long time. They're not going to leave behind a big estate. There's a lot of tasks that an executor is responsible for. A lot of people, when they step into the role, think it's very simple. I clean the house out, I sell the house, I liquidate the bank accounts, and I write checks to people. Well, that's one way to think about it, but there are a lot of tasks involved that the executor can be responsible for. It's quite an onerous position. So what does it all mean? People that are typically unprepared are going to be transferring a lot of money. A lot of executors want to do it themselves. They are not, in some cases, interested in getting professional advice because they like to keep it cheap. And we are living in a do-it-yourself world now. People are always looking to cut out the middleman. And if the middleman is a financial advisor, a lawyer, or a real estate agent, these are the kind of things that they're trying to trim back on. And those are areas where you enjoy statutory protection when you use professionals. And executors are often quite happy not to do that. And they're already having problems. A BMO survey said that, you can see the percentages there, administrative complications 47%, emotional problems 31%, but the important one to us, legal issues. So it's that perfect storm, there it is. And that's what it kind of looks like at the end of the day. Not every estate goes that way, but I can tell you there are lots of estates that look that way. They don't all end up in court, but they all extract a price from the executor in some way, shape, or form at the end of the day. So where do estate insurance claims come from? I'm going to run through a whole bunch of questions, and you can ask yourself whether any of this applies to you as a testator or as a potential executor. These are the situations and the questions that end up in a report to us that we are having a problem brewing, that we've got an estate claim underway. Some of these questions will speak to planning because a lot of the things here could be eliminated from better planning, and I'll try to touch on those as I go through. One thing when we got started in the estate insurance business, we never expected family law to have much of a bearing on what was going on. Yeah, we thought it'd be fighting siblings, but we didn't understand how far down family law problems are. And divorces or separations in the family, it's not just the testator who leaves behind a separated or a divorced spouse. If you look at the beneficiaries and their marital states, separated, divorced, the expectations that people have related to money that come out of family law issues are quite profound. It's something that we didn't plan for and learned a tough lesson on that right off the bat. Is there any acrimony between the family members? And that does include their spouses and their ex-spouses. It's very surprising. You can have 4 kids and the kids get along great, but the spouses don't get along great. And would any of you agree that a spouse can have a bit of an impact on the way that you react over things that are going on? I'm not telling you anything you don't know. Does anybody in the family feel that they've been treated unfairly or treated differently than their siblings? In my family, absolutely. Do you worry about the spending habits as a testator of any of your kids? How about of your kids' spouses? Typically that answer is yes, we've got some concern. Are there any health or mental issues or drug-related problems in the family? And that can include the executor, it can include the beneficiaries as well. And I read that the Addiction Research Foundation says that the rate of alcoholism in the population is something like 4.5% of the population. That's remarkable. But you think about trying to deal with people that have cognitive problems as a result of, they're on prescription medication, they're on non-prescription drugs, or they're big boozers. It could be a difficult situation to deal with. Has anybody got legal problems? We run into people with legal problems. Legal problems are criminal, and they're also the biggest legal problem we see sort of that jumps out at us frequently is insolvency. So we have lots of estates that end up that are insolvent, and the executor doesn't know about that at the outset. We have cases of people that are putting accounts in joint names, house or investments with one of the kids to avoid probate, and they find out that the kid's got money problems and they become bankrupt, and now the asset that they jointly hold with their parents end up as a problem. I think there'll be somebody speaking in a little more detail on that. So the perceived or real differences in the way people are treated. My wife and I have 5 kids. They all get treated differently. We've lent money to some, we've given money to others, we pay for school for some, we pay for school for all. We've done all kinds of different things. But what is obvious to me is that the kids all measure this stuff themselves, and they have a hard number in their mind as time goes on, and that will creep into an estate administration. Anybody expecting to be involved in a greater caregiving role than someone else in the family? That can come down to a money question at some point, and it often does. So that's a tension that can certainly creep in. There's often one person that ends up as chief caregiver to senior mom or dad. It's typically, I think you can look around and think about who it is. We all see our friends and who's looking after it, and it isn't me. Are there multiple executors? A lot of people want to name all their kids as executors. They think they'll stop the fight over executor compensation. The executors are supposed to act unanimously. Can be impossible, can slow down an estate administration, can be a major problem. If you're thinking about doing that, you may want to think hard about it. 2 executors, often manageable, sometimes not. 3, almost never manageable, tends to be problems. And we see a lot of it. Executors that live in a different province than the estate. How are they supposed to look after things? Big problem, but it's often the oldest child of the family that gets named as an executor. It doesn't matter where they live, and it's not practical. And is the executor well liked by the beneficiaries and others? it's important because probably not that they're well liked, but certainly that they aren't disliked. And people don't think hard enough about that. Are they thinking about, is it an executor that's also going to provide professional services to the estate? And here's an easy one, the real estate agent. I mean, there's so many real estate agents, and look, in every family, somebody's got somebody close by that's a real estate agent. Well, we see a lot of real estate agents that are executors. Of course, they want to sell the house. Well, you've got all the conflict issues that come out of providing professional services when the executor is also the professional providing, who knows what it is, financial management of assets or real estate. Could even be a law practitioner. One of our biggest problems has the executor been the power of attorney for property? It carries on while mom or dad is alive. They do their thing, but when mom or dad die, the transparency that's required as the executor, any problems that have built up during a power of attorney for property, they tend to want to be sorted out when a person becomes the executor, and it's a big problem. Joint accounts and joint names on deeds. Douglas was mentioning, sometimes it's just cheaper to pay the estate administration tax. If I could tell you the number of estates that we've seen that have spent considerable amounts of money avoiding estate administration tax, they'll spend more money to avoid it than they will to pay it. And some of the management tools that they use, and joint accounts is a good one where they feel that they're going to get some benefit by passing the asset outside the estate. The risk that comes from it that you'll hear about, I think, is much higher than the cost of paying the estate administration tax. So we're all attached to money different ways, but I mean, the estate administration tax is not like income tax. It's much more modest, a one-time event. And as your executor, or if you're going to act as one, are you able to hang on long enough to do the task? These tasks go on for a long time. I was speaking in Toronto down at the Science Center, and the pitch was over, and this fella came over with a walker, and he walked like this over to me, and he said, I got a couple questions. He said, I'm going to be my brother's executor. And I thought to myself, my gosh, I can't believe it. He was 83, and his brother was 90. And he said, I'm not sure I'm going to be up to it. And all I was thinking was, wow, can you see the problems that can come from that sort of thing? You have to be realistic. And if you're named as an executor and you're not going to be able to do it, you can renounce. I mean, that can be the smart thing to do. And are you willing to fulfill the role? Not everybody wants to do it. And if you don't want to do it and you go into it reluctantly, that can be a recipe for trouble as well. So joint accounts are potentially problematic. We did have a case of a joint account, and it was on the house, and the joint account holder, who was a daughter, has money problems, she went bankrupt, and the creditors were looking for the half interest in the house that she held with her dad that they were going to pass outside the estate. You can imagine how Dad would feel about that. Do you have any complex financial assets? As an executor, you may have to run something like a small business. You may have to run real estate investments. We have a lot of people that will hold a rental house or a rental cottage, and an executor becomes responsible to manage those assets. So if you're naming an executor, make sure you name somebody that's got some business skills, because that may be necessary to have. If you're not able to do it and you're named as the executor, then you may want to think hard about whether you want to take on the role. How about debts or loans to family members? Anybody here ever lent money to one of the kids? Okay. Nobody wants to own up to it. So when you loan money to the kids, often there's no note kept. So Mom or dad knows that they owe 10 grand or they owe $20,000, but they don't document it very well. Don't think that everybody else doesn't know that there's been a debt between one of the kids. The other kids pay close attention to this sort of thing. Mom or dad don't often tell everybody when they loan money because they're called a fool when they lend money to the brother or sister that needs it because they're a bad money manager. These are problems that haunt us on the claim side of things because the executor is responsible to realize the debts that are owed to the estate, and that can cause a lot of trouble with the beneficiaries. Seasonal properties. I mean, this is a popular one that you read about in the Globe and Mail on the weekends. Who's got a cottage? Who uses the cottage? Mom and dad own it. You've got several kids. Maybe there's only one kid that is using the cottage, and that kid is paying all of the bills. They're putting the roof on, and they've replaced the docks, and they've done all of the maintenance. Granted, they've had the exclusive use of it. When mom or dad pass away, often that kid is expecting they're going to be left the cottage. And often it doesn't happen. They'll split the assets evenly between the family. What does that end up looking like to us at the end of the day? It looks like an unhappy sibling that's pursuing the estate for $150,000 in hard expenses that they put into the cottage while they were using it over the last 10 years. So if mom or dad, it speaks to communication, and communication being a big problem. Expectation management, I can't say how important that is and how badly it's often handled. If you explain to the kids what they can expect, it doesn't come as may not be a happy discussion, but at least it doesn't come as a shock when mom and dad are gone and result in the tension that it often does when it comes as a complete surprise. The principal residence. Lots of kids would like to move into mom or dad's house. And a lot of them expect that they're going to get a discount on it. So when they go to dispose of mom or dad's house, one of the kids wants to buy it. The executor is then asked, well, I shouldn't have to pay the full price on it, but you've got the balance of the executors, and they're having a problem with that because, of course, they want to see the full price on it. So communication and planning, a solution for that. Anyone else other than you living in any of the properties? We have lots of cases where there are problems because there are a family member that's living in a property that the executor or that the testator owned, and they don't want to leave, and that can be a big problem. So getting them out causes family problems, causes legal problems, causes expense, and typically it could be dealt with while you're alive, but it's the executor's problem to solve that after you're gone. Family businesses, active shareholdings that require management. There's a lot of family businesses that don't have a perpetuation plan in place, and you think about somebody dying that has a vibrant business and maybe 2 or 3 other shareholders, and now an executor is forced to step in, and if they have for instance, if they had a majority interest in the business that's in the estate, they either have to make arrangements to run the business themselves or to hire somebody to do it. And that's a time when the businesses start to fall apart because you have minority shareholders that see an opportunity to either pilfer a business and go out on their own, or you've got employees that want to take advantage. It can be a big problem. And we see lots of cases where there's been limited planning done around family businesses, and they can be quite large businesses that are left. Unique family assets. Douglas was talking about, I only caught the last 10 or 15 minutes, talking about unique assets and things that have emotional value. You need to find out what the personal property looks like in the estate. You got a few issues on it. A lot of people have a garage sale and dispose of assets, and the assets can end up having an actual or a suggested high value after they're gone. So that can be a problem. It can be an estate tax problem. It can be a problem with the beneficiaries. Emotional value on household contents. We get lots of cases of complaints because somebody was expecting to be left mom or dad's lawnmower was going to move to somebody, and that isn't going to happen. The executor is going to sell it. You've got problems because somebody has an emotional attachment. People that have a will. How current is your will? Is everybody's will within 5 years? Little business development opportunity. You're not drafting any longer, so this won't help you. The currency of wills. What are the chances that anybody goes 5 years without a major life event taking place? Major life event is a marriage, a divorce, birth of a son, daughter, grandchild, death of a relative, change in financial circumstances. Life is dynamic. We see a ton of wills that come in and they are 30 years old. What's happened in 30 years? All of the kids have moved away, kids have died, things have changed, people have become divorced, remarried. Keeping a will current is very, very important, and I think it's a great opportunity for lawyers these days because a lot of people pay no attention to it. And I will say that legal practitioners, I don't think, go chasing updates on wills. I think will preparation is typically not a big money maker for the practice of law, and I don't think anybody goes looking for it. So if you're a person that's interested in looking after your own affairs, you may have to initiate a discussion with your lawyer to do an update, but it's well recommended. The do-it-yourself will. It's a popular document now. People are going on the internet, and for $50 they can complete a will online. In some cases we've seen them and they're okay. In a lot of cases we've seen them and they're not okay. So if you're dealing with leaving a bunch of money behind, it probably makes sense to invest a bit of money and have somebody that understands what they're doing deal with all of the legal and financial issues around inheritance, and that would mean consulting with a lawyer. And while I'm on that lawyer piece, there are a lot of lawyers in the country. Not all of them are will and estates practitioners. People know there are lawyers that are good at it, that do a lot of it, and there are some that don't do very much at it, but they will still do it. And to me, it would make sense to ask your lawyer how big a portion of your practice is your wills and estates, because there are lots that it's this much, because it's overall probably in all of the revenues that come into the practice of law, it's a very small amount. So there's lots of lawyers that will prepare a will, but there's certainly there's a range of capability that exists out there, and it makes sense to ask the question, are you doing it a lot? Is anybody purposely included or excluded from the will, and do they know about it? Because when they don't know about it and they find out about it at the time when the testator passes away, that shock can turn into a risk of estate litigation. Mary, how am I doing for time?
Pretty good, just keep going.
Okay. Any charities recognized in your will, make sure you name them properly. It's another area of trouble. St. Paul's United Church, they're all over the place. And we do run into a fair number of cases where there's ambiguity in the name of the charity. Are the family members aware of who the power of attorney and executor are? If they're not, and they find out it's somebody they don't like, it can be a problem. Expectation management, it's a good way to plan to avoid surprises. Is the executor familiar with the contents and the intentions of the will? I can tell you that often they are not. It is worth asking the question, can I have a look at the will? Once somebody dies, it's a day too late to ask any questions. Everything's a mystery after that. If you have an opportunity as an executor to ask your friend or your mom or your dad, can I look at the will so I know what to expect? You can solve a lot of problems. And if you can point out a problem, because you know it's going to be one, they can change their will, they can correct it, or they can write a letter so they can explain what their intentions are. And you can't do it after you're dead. everybody has an assumption what they're getting. Again, expectation management. It shouldn't come as a total surprise if you want to avoid problems for the executor down the road. And charities and beneficiary groups. If you're planning to leave $250,000 to the Canadian Cancer Society and your estate is worth $500,000, you should let the other beneficiaries know if it's going to be your kids, because that comes as a big shock and it causes a lot of tension. I can't say that it causes a lot of estate litigation because I don't know that for a fact, but I can tell you that it can cause the lid to start to boil on the pot. So. Final arrangements and communications. Does everybody know what you want as far as a funeral goes? Because often it's left to the discretion of the beneficiaries what they're going to do with mom or dad as far as the final plan is concerned. And if you've got 2 or 3 or 4 kids involved, nobody agrees necessarily on what it is. You'll have one that feels very guilty that they're not going to get a $16,000 casket for mom. You've got one that's a cheapskate that would be happy with a pine box. These are the tensions that can arise at the funeral home. And if you don't leave explicit instructions with people, how can you expect your executor to really satisfy what you were expecting as a testator and what your other siblings are expecting as well? Another area that causes a problem is that we get people calling us and they say, we'd like to arrange some insurance because we're starting to act. We say, okay, it's, the premium's $1,500. They say, well, we can't send you any money because we haven't probated yet. And we go, well, can you not get any money? There are lots of estates where the executor can't get their hands on any liquid cash. They pay for the funeral with a credit card, and they have no money to be paying the other estate bills that go on, and there may be property taxes that need to be paid. Banks will cooperate to a different extent depending on what bank it is and who you're talking to. So you may not be able to get your hands on cash as an executor. It makes sense as a testator to provide some liquidity so that your son or daughter who may not have a lot of money doesn't have to go to the bank and borrow, make arrangements to borrow money on behalf of the estate. So liquidity would make some sense from what we've seen. And is the family all clear on the plan? Like I say, communicate that to them and avoid problems starting at the point of the funeral. So when I ask these questions and I talk about these issues, some people will be going, that's resonating with me. I've got siblings that are difficult. I've got friends or family that have drug or dependency problems of some sort. I've got people that are expecting to get a lot of money and I know they're not going to get it. And there's probably a question or two that resonates with everybody in here. But there are some estates where people go, I'm not worried about a thing. Everybody gets along great. You know what? Lots of estates do go that way too. But I think the ones that go that way can probably speak to effective planning at the outset because they don't get surprises. Surprises are a problem. So really what we end up with here is most executors don't know that they have an unlimited personal liability as they administer estates. You're effectively using your own assets as a pledge of your good performance on the estate. Most people don't understand what it is to be a fiduciary. And if you're really, really lucky, you're never going to get good at being an estate trustee or an executor. Some people, I've talked to people that are not professionals that have done it 3 or 4 times. I can't imagine what they did to that person while they were alive to be named that many times. Importantly, most testators don't have any idea what they are imposing upon their executors when they're gone. The type of problems that get left behind as a result of either not planning or not wanting to plan. And it's a big imposition on not only the executor but on the other members, the other beneficiaries within the estate. All you want as a testator is somebody to look after things when you're gone. But what you're not expecting is to leave your family in the lurch because there are all these problems that come from it that will either break up the family or cause somebody a bunch of a bunch of expense. So, like I say, think about all of this if you're planning to act as an executor or if you're planning to ask someone else to act as an executor. So, some simple solutions that we see: executors are personally exposed. You can arrange insurance, and insurance in an estate trustee context means that you defend and you settle the actions that are brought against the estate trustee for mismanagement of the estate. It's that simple. That's the depth of insurance information I'll give you. You can buy it in advance, and they sell a product called an estate services agreement, and it will allow a testator to purchase that so that you don't have to leave the estate exposed. It'll be looked after at the point when you pass away. Or it can be arranged at death. But when it's arranged at death, people typically, I can't believe this, they don't want to buy insurance. So what they do is they wait until there's a problem, and we turn down close to 50% of the applications that we receive at death. Why? Because the estate has already turned spicy and there's a problem looming, and we've got letters that are being exchanged and we have threats that are coming up, and everybody wants to buy insurance when there's a problem. Unfortunately, when the house is on fire, you can't buy house insurance. So it's one of those things that it's better to organize in advance. And if it's not necessary to have it because everything goes well, terrific. But if you need it, if you have it placed in advance, you won't be refused. Second thing is clarify your wishes and close the gaps. So all of these expectation management things that I'm talking about, communicate with the family, make sure that there are no surprises, because surprises are a bad thing. And if you start to plan for that now and have the family meeting so that you explain what your intentions are, it's better than leaving it till when you're gone and they have to try to figure out what your expectations were. And typically the way you're treated in the will is the last statement that mom or dad made about how much they love the family. So if you're not left much because you had a lot of money, a lot of people take that as mom or dad didn't think much of me. They only left me a bit, and they left more to somebody else. Explained in advance, the person that's got more means and is going to be left less money may not like it, but they understand it. And the third thing, get the roadmap updated. So make sure that your will is current, because a 30-year-old will not do anything for you. It will be as problematic probably as not having a will. There's some hard rules. If you don't have a will, it's fairly simple. There are rules on who gets the money. You may not like it, but at least it's easy. If you have a badly outdated will that doesn't speak to the realities of your situation when you die, then that's potentially more problematic. So prepare your executor for success instead of failure. So why is it important to protect the executor? Why is it important to clarify your inheritance plans with your family? And why is it important to have supporting documentation in place by way of a will or letters and explanations? Hopefully I've touched on the answers to some of those questions, and thank you. Any questions?
Yeah.
One question. If someone purchases executor insurance, what is the term of the insurance? Does it go to the receipt of the clearance certificate, or how does that term of it work?
Scott,
Well-
can you repeat the question?
Sure. So the question is, what would the term of the insurance coverage be? We sell varying terms. From our opening terms are 1, 3, or 6 years, depending on what you anticipate the complexity of the state and the time that you need to have it in place. Your liability can continue past the date of the clearance certificate, because you can still have problems that come out of the estate unrelated to the tax issues. So I think that's probably one of the challenges, is understanding that there isn't really a formal closing date for an estate. There are statutes of limitation that apply that have been explained to me many times, and I can only tell you that in the worst case it could run maybe 14 years, In other cases, it's as short as 2. So if you continue to have some need, we can renew the policies, so they can stay in place for a long time, as some do.
Thank you.
Okay, you're welcome.